So 46% denial rate.
Sounds like my dating life.
I like that. I like that.
Are you more at the 12% traditional?
I'm probably right there in the middle with you.
Hey, welcome back to the High Realty podcast. My name is Kaleo, founder of the Hawaii Institute of Real Estate and highrealtycourses.com. Today, we are live from Aloha For Now Studios with Matt Geverola. What's up, Matt?
Aloha. Good morning.
Need to come up on the mic a little bit. So, good morning. Just a little bit about Matt. Matt is a senior loan officer at Hawaii Mortgage Experts, and we actually met on the basketball court, weirdly enough. Tell me about that. What were your first impressions of me? Don't hold back.
Okay, so I met Kaleo at 24. I didn't know who he was, but Kaleo has an interesting game. He's physical, he's aggressive, and he takes wild shots. And I was like, man, who's this Filipino guy taking crazy shots? but you were making crazy shots, and yeah, so that's how I originally met you.
Yeah, and I remember watching you. You had a lot of respect on the court. A lot of the guys had no bones about giving you the ball, and so that actually says a lot about a person as soon as they step on the court. You know, basketball is interesting because you make a lot of assumptions really quick.
Yeah,
right.
I agree.
So you know really quick whether you should give somebody the ball or not, right? And what I love about athletics and also in business is like there's no room for you kind of can't pretend in business, right?
You can get exposed really fast.
Yeah, you can't pretend in business. You can't pretend in athletics. And I've heard somewhere that business is a mental sport. Yeah, agree?
I'd agree. Business is very competitive. Sports is competitive, and that's kind of why I've chosen my field, because I get to tap into my competitive energy.
Yeah,
every day.
I like that.
Yeah.
So just reading about you and knowing about you from outside of business, senior loan officer. Tell me about that. Like, how do you get to become a senior loan officer? Does somebody who just took the loan officer exam get to call themselves a senior loan officer, or what makes you a senior loan officer?
So we all come into the industry as a loan officer.
Mm-hmm.
You know, I passed my test in 2015, and then I started doing business. And after about 3 or 4 years, after I found my confidence and had a good amount of closings, I decided to put senior on my business card and on my emails.
So
it was kind of self-given.
How is it that you are able to give yourself a title in an industry?
I think you just have to follow a baseline of being a loan officer.
Yeah.
Like we're loan officers, but you know, I mean, I think a company can give you the nod, like, okay, that's all right. You can be a senior loan officer.
That's tight.
And
so what's next? Loan God?
Loan savant.
Loan savant. Loan genius. And how'd you get into the industry, brother?
Okay, so I moved here to Hawaii about 7 or 8 years ago. Mm-hmm. And I always wanted to be in the real estate industry. And something was just calling me to the mortgage industry. And because, you know, you can be a realtor, you can be a property manager, you can do construction. But mortgage was really calling my spirit. And but yeah, I was interviewing with a lot of companies. I had a good interview with Hawaii Mortgage Experts, and it felt right. And I pursued it. I put my head down, got my license, and have been doing this for 7 or 8 years now.
Yeah, that's rad. My last name weirdly means mortgage.
Are you serious?
Yeah, in Ilocano.
No way.
Yeah, so salda or saldare in Spanish is to pay off. Right?
Are you serious?
Yeah, so years ago, my ancestors would create liens on properties in order to make loans to non-landowners.
Are you sure you're supposed to be a realtor?
What does your last name mean? Geverola.
Geverola? I haven't really looked into the meaning, honestly.
Oh man,
Yeah,
that's how I
look into
figured
it.
out I should get into real estate. I was looking back at my ancestry. I was like, what did my family do? Like, well, apparently they worked in real estate. So that was kind of my guiding light, weirdly enough.
What year was that?
It was 2013, 2014.
Okay.
Yeah.
Yeah. I recently kind of went back to the hometown where my parents are from and really dug into my family history.
What hometown is that?
Davao City. It's
Okay.
like on the southern islands of the Philippines.
It sounds kind of badass.
It's pretty
Is it?
cool. It's pretty cool. It's like, so have you been to Manila?
I haven't been to the Philippines, man.
That's nuts.
Yeah.
gotta
Let's go.
Dude.
We'll go. Okay.
I try to go once a year.
So tell me about
But,
Davao City.
Davao City is the largest city in the southern islands. It's actually bigger than Manila. Manila has a lot more people. It's heavily populated, but Davao is a bigger city, and yeah, it's I would say it's a thriving city. It's out of U.S. jurisdiction, so
Wait, what?
Yeah, like military folk, they you can go to Manila,
Okay.
but they're technically not supposed to go down to Davao City. Or
Interesting.
that's what I heard. We may have to fact check that, but
Say whatever you want, dude.
yeah.
For all of our 5 listeners
Yeah.
out there.
But when I went to Davao City, it just it really felt like I was out of like I was just somewhere different. I wasn't like in Manila. You see a lot of foreigners.
Yeah.
Yeah, but in Davao City, you didn't really see a ton of foreigners. But it still felt like a full on city.
That's in the Visayas.
It's yeah. So people from the southern islands are Visayan.
Okay. Yeah. So for our listeners who are not Filipino, that is something Matt and I have in common. But there's, I think, 3 main groups that all of the 87 or 112 dialects can fall into, the northernmost being Ilocos, which is where most of the Filipinos in Hawaii are from.
Yes.
And I thought the Visayas were in the middle, or it's more middle. Southern.
Middle is more Tagalog.
Okay.
Like Tagalog is like the big language.
Got you.
But Visayan is more of the southern islands, like
okay.
Cebu.
Copy.
Yeah.
So like,
Palawan.
if you're from, what's the bottom? Mindoro? Mindanao?
Mindanao, and that's where Manny Pacquiao's from, General Santos City.
Yeah. So is that Visayan?
Yes.
Okay. Well, you don't have exclusive rights over Manny Pacquiao just because you're Visayan.
Me and Pacquiao, we might be related.
Okay. But he belongs to us all.
Yes.
Yeah.
I'd agree.
Yeah.
I'd agree.
Yeah,
Were
my,
you a Manny Pacquiao fan?
I wasn't until I heard my very religious uncles shouting at a family party, "Pacquiao! Pacquiao!"
I love that.
Yeah.
Yeah. No, he inspired me when I was in college because I played college basketball for years.
Yeah.
And dude, I was so inspired. He was knocking down all these big names, and I was like, man, look at this 5'3" Filipino guy just dominating every weight class. 5'3" Filipino guy.
I had never paid for a fight until he fought Floyd. And that was something that me and my dad did together. We don't do a lot of stuff together, but we both sat down to watch the Floyd fight, which
awesome.
we were kind of disappointed in the outcome. But
Yeah.
as I think 90% of people were not like the result. Like some people might have been happy that Floyd won, but from like a entertainment value perspective, the fight itself wasn't anything worth writing home about.
Yeah, I mean, he's definitely had better fights, and I was one of the guys who was buying the pay-per-views,
Yeah.
and I would basically throw a party every time, and I found him very inspiring, and shout out Manny Pacquiao.
Yeah. Hashtag. I'm going to name 7 Filipino words, and I want you to rate them from 1 to 10, least offensive to most offensive.
10 being most offensive.
10 being most offensive.
All right.
Word number 1, Pinoy.
Pinoy. I'm proud to be Pinoy, so I'm going to say 2
Okay.
because you can use it offensively.
All
but
right.
that would be hard to.
Very good. Very good. Number 2, book.
Book. That's a term I'm not very familiar with,
So
being
it
from the
is
Southern Islands.
it is a very Hawaii term.
Okay.
Right? Have you ever heard anybody say, "Hey, book"?
Book. I haven't.
No.
Yeah. But it means
It means Filipino. I have no idea where it comes from. As we're talking about it, I think there may be some roots in matapia, where it sounds like a chicken, maybe. And Filipinos maybe raised chickens, I think.
I'm gonna give that a 6.
Okay. All right.
I think someone can hurt my feelings with that word.
Yeah. I had a Filipino girl ask me one time, like, are you, she thought I was like Samoan. And she's like, are you Samoan or book? I'm like, why are
Wow.
those the choices? Like, shouldn't it be like Samoan or Filipino or like Manong versus Uso, something like that? Okay, number 3, Manong.
Manong, I like that word. Manopo, manong. Sign of respect. I would say that's a 1.
Okay, good. Number 4, Bakla.
Bakla, fun word. Offensive. 7.
Depends. Wait,
Yeah.
but does it though? Because if you are Bakla and
Yeah.
you get called Bakla, that's still kind of offensive, right?
Yeah. It's like, hey, why are you calling out my
Bakla-ness.
sexuality?
Yeah. Oh,
Yeah,
you
me,
said it.
I'm straight male.
Yeah.
So I wouldn't want to be called bakla.
Yeah. 7. Okay. Number 5, Todokun.
Todokun. I'm not familiar with that one. We have different dialects.
Yeah.
So, but
Take a guess.
Todokun, is that means intelligent, roughly, or?
It actually means maybe a little slow.
Yeah.
Yeah, it does. Yeah.
Todokun. Yeah. So I wouldn't want to be called slow. So I'm gonna say 7 or I'm gonna say 8.
Yeah. All right. So next time I'll call you down on the basketball court. And,
I'm gonna come at you.
yeah. Okay. Number 6, Puto.
Puto. I'm gonna say 3. That's it's a food. It's really
Yeah.
I don't eat it a lot, but it's good.
Good. Number 7, Tinikling.
Tinikling. Again, that's different dialect, but what does it mean?
It's like a Filipino folk dance. My
Okay.
parents used to do.
Gotcha. The one with the sticks.
Yeah, my man.
Okay.
Yeah.
Kobe did that when he went to the when he went to the Philippines, right?
Oh man.
Yeah. Anyways, but I would say I'm not offended by that. I'd say
Yeah,
1.
that's just a throwaway word. Okay,
Yeah.
great. Thanks for playing 1 to 10, most offensive, least offensive Filipino words.
There's some offensive words out there. We could have got nasty with that, but that was safe.
Keeping it clean.
Keep it clean.
All right. Okay, so we got some headlines that I wanted to get your opinion on.
Okay.
We're going to talk about some headlines really quick and then touch on a few key concepts with lending to add some value to the lives of our viewers. One of the reasons I like to have industry experts on this show is so that we can keep the general public informed or at least up to speed with terminology that we use so that you can enter into conversations with at least a little bit of market knowledge so that you can make the most informed decisions when you're going out looking for mortgage experts, looking for realtors, and that kind of thing.
Absolutely.
So, really quickly, what's the difference between a mortgage broker, which you are, a direct lender, and a retail bank or depository?
Okay, so a retail bank or a depository bank is a large bank that takes deposits, savings accounts, CDs, and they likely have a mortgage side, a lending side. And then a direct lender is an entity that just does mortgages.
Okay.
And then I'm a mortgage broker. I represent several lenders, including depository banks. So I'll represent a lot of the national lenders, like Rocket. I used to do UWM as well. And then I'll also work with the local banks like Bank of Hawaii, First Hawaiian Bank,
Okay.
Territorial. And basically when I have a buyer or client, I'm going to shop their scenario with all of my lenders and see who has the lowest rate. I'm always going to start with the lowest rate and the best program. And we want to do a 30-day close every time.
So when you explain it like that, it sounds like the superior route, or at least the preferable route, going with a mortgage broker over, say, a direct lender or a retail bank. Would you agree?
I think, everyone has a unique scenario. And I think being a mortgage broker, I get to find leverage for every scenario. And so short answer, yes.
Cool. I like that. It's okay to be edgy.
Yeah.
It's okay to be edgy.
I think every realtor should have a trusted mortgage broker to work with. I think it's safe for them to have a direct lender that they're comfortable with, but they should also have a mortgage broker, because not every scenario, not every deal is going to be cookie cutter, and even in Hawaii, we're finding so much issues with the condos, and rates are high right now. So you want someone to shop for you, and you don't want to do multiple credit pulls. I'm only going to do one credit pull, and I'm going to shop for you with all my lenders.
That's awesome.
Yeah.
And I hear mortgage brokers talk all the time about the 10-year treasury note and how mortgage interest rates are tied more to the 10-year treasury note than the federal funds rate. Can you elaborate on that for me?
Yeah, so I don't really follow the federal funds rate. I mainly follow the 10-year treasury note because it's easy to track. I wake up, I check my phone. It's on my home screen. So right now it's at 4.595.
Okay.
It went down. That's good.
Can you break that number down for me? It's at 4.595. What does that even mean?
So I remember back during COVID when the market went crazy.
Okay.
Right? We had a market frenzy. It was in the twos. It got really close to zero.
Okay.
Right? Rates were at all-time lows. And I remember, and generally, when this goes up, rates worsen. When this goes down, rates better.
So what is that? That's how much one note costs? Like 110? Sorry, I have no idea what this is.
I just know it's a 10-year treasury note. It's
the price of a 10-year treasury note.
The price of the bond.
Oh,
it's a bond.
Okay.
Yeah. So 10-year treasury note is a bond. And when this goes up, rates go up. I will literally get emails. When this starts going up aggressively, I'll get several emails from the lenders. Rate worsening. Oh. And then when this goes down, I'll get several emails. Rate improvement. And that's what I like to see. That get excited, So I'm expecting some emails here today. Rate improvement.
Okay.
Yeah.
Very cool.
Yeah.
Very cool.
Yeah. I just got a purchase contract yesterday, and I locked with one lender yesterday, but I'm also shopping with the other lenders. I'm hoping that we can get a better price for the client.
Thanks for bringing that up. So when you say I locked, could you tell me, or could you tell our viewers what locking a rate means?
So basically, with a buyer, let's say you're my buyer.
Okay.
I approved you.
Okay.
Right. And then
so validating. Thank you.
Kaleo, you can buy a home for up to $2 million.
Wow.
Yeah.
That's probably a stretch.
I looked at your assets,
Okay.
pulled your credit, saw your income.
Okay.
Right. We pushed it through automated underwriting.
Okay. So I have given you all the documentation to come up with that conclusion.
Yep.
Thank you.
Yep. And I communicated that to your realtor. Now we're ready to go. You start home shopping.
Okay.
Right. You see a property you like.
Okay.
You tell your realtor, hey, I want to put an offer on that. They accept your offer. Great. Now we got a purchase contract. So now we need to lock an interest rate. So I'm going to shop your scenario, and I'm going to see who has the lowest rate. And I'm hoping for a 30-day close. So I'm going to do a 30-day lock.
Okay.
Right. A 45-day lock is more expensive.
Okay.
A 60-day lock is more expensive.
So
30-day locks.
By locking it, you're guaranteeing, let me know if I understand this right. By locking the rate, you're guaranteeing that the rate will not change throughout the rest of the transaction. Is that correct?
Correct.
Okay.
And you're not necessarily locking that exact rate. You're locking the pricing of that day, so you can adjust.
Okay.
But you're getting that day's pricing because the pricing adjusts every day on its market hours. So the market's generally open Monday through Friday, business hours, Eastern time.
Okay.
Yeah.
And what are people locking at these days?
Man, these days, I'm sure you guys see the headlines. And right now you're in the 6s and the 7s. And there's ways to get into the 5s for the first year. It's called a buy down. I'm sure we'll elaborate on that. But generally you're going to be in the 7s. There's one in escrow in Hawaii Kai, 1.3 purchase. There we locked a rate. I believe it was 7.25.
Okay, cool.
7.25.
So we locked 7.25, but did they do a buy down?
That one they did not do a buy down. But
Okay.
this one, that yesterday we just got a purchase contract for a Waikiki condo, and they are taking advantage of a buy down.
So could you explain to me, let's say I'm a novice home buyer again, never done it before, never even got a loan before, right? So I come to you like, Matt, I heard about this buy down as a way to save me money. What is a buy down? One, two, how does it save me money?
So when you first come to me in our initial conversation, I'm going to educate you on a buy down because it's crucial in today's market. So basically, let's say you find a property $500,000.
Okay.
And the going rate is the 30-year fixed rate is, let's just say 7.5.
Okay.
So what we have to do, I'm going to communicate with your realtor. Hey, you need this much seller credit to be eligible for a buy down. A 2-1 buy down is the most popular one. So if we get that seller credit on a $500K purchase, it would probably be roughly like $7,000. You know, you need to ask for $7,000 seller credit,
Okay.
and then you use that to leverage to get a lower rate. And so for the first year, instead of 7.5, you'll have 5.5
Okay.
for the whole first year.
So that dropped by 2 points. Okay.
2-1 buy down, and then the second year you'll be at 6.5.
So that's 1 point.
Yep, and then after the third year, you're subject to the 7.5. But a lot of the industry thinks that rates are going to come down, which they probably will. We're probably at 20-year highs, maybe 25-year highs,
Yeah.
and just looking at charts and with the headlines, it's a fair assumption that rates will eventually come down in the next 3 years. So that kind of validates your reason for leveraging that credit for a buy down.
In my opinion, I agree.
Yeah.
But we can't predict the future, so no guarantees. But yeah, I do agree.
Yeah, our job isn't to be a crystal ball reader. It's to give information and be transparent to the client so that they can make an informed decision. I want them to make that decision. Like, hey, you can do this, or you can do a permanent buy down. You can pay 2 points. It might get you in the 6s, and you'll have that for your 30 years. Everyone's scenario is different.
Cool. So I heard you say after year 2 is up and we're entering year 3, now you are subject to the 7.5. Is that right?
Correct.
So
Full rate.
That's great because it's not variable after that.
Correct. That's for the life of the loan. But a lot of people don't keep their loan for 30 years.
What is the average life of a 30-year fixed mortgage loan? Most 30-year fixed mortgage loans don't last for 30 years. Am I right?
Correct. I would say 5 to 7 years.
5 to 7 years. So what happens after 5 to 7 years? Do people just pay the whole thing off? The windfall of cash?
No, I would. In my experience, after 5 to 7 years, that's either rates come down and they refinance, do a rate and term refinance, or they have equity in their home. They've built equity and they want to access that equity, perhaps buy another home or pay for college tuition, maybe add an addition to your home or upgrade your home. So they'll access the equity from their home.
That is a great segue into the first article that I wanted to discuss with you.
Okay.
So this one's from nationalmortgageprofessional.com. And the headline is Access Denied. U.S. Homeowners Struggle to Tap into Rising Equity. So just reading a little further down, U.S. homeowners are facing a predicament. Despite sitting on a treasury trove of equity as real estate values rise, many need help unlocking this wealth. A new analysis by Point, a home equity investment company, sheds light on this increasing challenge and the dilemma of the modern housing market. My first question that I want you to help unlock for our viewers is, what is equity?
So equity is the difference between your loan balance and the value of the home,
Okay.
the market value.
Could you give an example?
Like, for example, let's say you bought a house for $500,000, and 3 years down the road, the value of the home goes up to $700,000.
Okay.
Okay, but you also pay down the balance on your loan. So now your loan balance, let's just say it's 400,000, and the value of your home is now 700,000. So your equity is 300,000.
Nice. And so when we talk about unlocking equity, like what does that look like?
So you have 300,000 equity in your home, and I mean, you can sell your house and get that equity.
Okay.
But you probably don't want to sell your house. You probably love your house.
And you're going to have to pay some, well, you might or may not have to pay some taxes depending on how much time has elapsed. Okay.
Correct. But, you probably want to hold on to your home. And so you can do that by either doing a cash out refinance where you take equity out of the first mortgage and you redo the first mortgage.
Okay.
But I really only recommend that when rates are more favorable, right? I wouldn't recommend that in today's market. It might make sense in some scenarios. But the most popular way right now is doing a second mortgage, also known as a HELOC, getting a home equity line of credit, HELOC.
Nice. Thanks for that.
Yeah.
All right. Let's move forward a little bit in this article.
Okay.
Next paragraph says, homeowners in the U.S. have seen their equity balloon by a whopping 64% in the last half decade, reaching a record $29.3 trillion in the first quarter of 2023. This surge is largely attributed to a 56% hike in home prices over the same duration. Despite these positive numbers, the avenues for homeowners to harness this equity remain elusive. For instance, while the idea of drawing from this equity may seem straightforward, the current mortgage landscape says otherwise. The home equity lines of credit, or HELOCs, as you so expertly explained to us, Matt, once a popular method for homeowners to access their equity, now seem out of reach for nearly half of those who apply. Even more telling, the denial rate for HELOCs stands at an alarming 46%.
Wow.
Starkly contrasting with a 12% denial rate for traditional mortgages. You seem to have some thoughts.
So 46% denial rate.
Sounds like my dating life.
I like that.
Are you more at the 12% traditional?
I'm probably right there in the middle with you. But yeah, so I can understand why there's a high denial rate. And that's one, because the banks are tightening up right now.
Okay.
They don't want to lend.
Yeah.
They don't necessarily want to lend. They want to collect deposits, right? That's why you see interest rates on CDs or savings accounts high right now.
I see.
They don't want to lend. But there are still some lenders out there that will go up high in LTV, loan to value.
Thanks.
So most lenders will cap you at 80%. Right. So let's just go back to our scenario.
Let's do it.
700,000. Let's say your home is valued 700,000. Let's go to my trusted calculator here. And they only want to go up to 80%. So that's 560,000.
80%?
80%, 560,000.
Okay.
And then let's say your loan balance is 400.
400.
But
Okay.
yeah, so technically you can get a line of credit there for 160 based on an LTV of 80. Circle that 80. That's the LTV.
Okay.
So yeah,
I'm not doing the math in my head, so I hope what you're saying is
160.
correct.
Yep.
160. 160?
Yeah, you would hope to get a line of credit for 160, which is you can make a good move with 160K.
What would you do with 160,000?
I do a lot of things, but yeah. So a lot of people are running into LTV issues, but some banks will go all the way up to 95.
Wow.
90 LTV.
Credit unions, probably.
Probably a credit union.
Okay.
A local credit union.
Oh.
So there's that. So they're running into that issue. They're running into high interest rate issues, right? I remember when HELOCs were saying, hey, we'll give you an intro rate for 2%, an intro rate for 1%. Now that I'm seeing intro rates 7 and 8%.
I once had an intro rate. I once had an intro rate for 1.75% for 2 years. It was amazing.
Dude.
A lot of cash flow on the rental.
I call that free money.
It was amazing. It was amazing.
So now rates are so high, and then they have to qualify. They have to qualify for that that second mortgage on top of their first mortgage. And right now, the nation is up to its neck in debt, and consumer debt is high. They probably have a lot more consumer debt.
Yeah.
So I can see that. About 46% makes sense to me.
Okay.
That's why you work with a mortgage broker, give you a good chance, a better chance.
I like that. I like that. Okay, one more article, and then we'll just kind of free flow it from there. This one's from Zillow.com. Mortgage rates may breach 8%, but don't expect a major market shift. More potential buyers will be priced out, and the inventory deficit may deepen the higher mortgage rates rise. Okay, a little bit more on the headline. Some bullet points for you. The housing market is not likely to see significant changes if mortgage rates rise above 8%. Next bullet point. The income needed to afford a typical home would rise from about $107,000, I'm guessing per year, at today's mortgage rates to nearly $114,000 if rates hit 8%. And finally, building more homes to address the housing shortage is the only sustainable way to improve affordability and give more people access to home ownership. That sounds like an opinion to me, and they may be trying to boost the construction industry that is kind of having a hard
new
time.
build industry.
Thank you, Zillow, for supporting construction. What do you think, man? Major shift, no major shift? Are rates going to breach 8%? What are people supposed to do?
8%. Oh, that's tough. 8% is tough. And I think there is some accuracy here. 8% is not too far off from 7%, which we've been seeing for a while. And business closed or a home sold, it's decreasing year over year, right?
So help me with some quick practical math. Let's say median home price in Oahu is still about $1 million, $1.05 million, but for math purposes, let's say it's $1 million.
Okay.
Right. Typical LTV, loan to value, is 80%. So somebody would be getting an $800,000 loan. They need to put $200,000 down.
Correct.
So on an $800,000 loan for $1 million house, what is, just kind of spitballing, what is a monthly payment, approximate monthly payment, going to be on an $800,000 loan at 7.5%? Let's actually do this. Let's do 7%, and then let's do 8%.
Let's do it. So let's just say a loan amount. Let's go back in time.
Okay.
Let's say 3%.
Jeez. Not that long ago.
33.73.
33.73.
Principal and interest.
Okay.
33.73 on 3%, 800,000. Now let's speed up. Let's go up to today's times. 7%, 5,322. 553.22.
At 3%, we're talking about 33.73, and are we at 7%?
Yep.
At 7%, your monthly payment is 5,322.
Yep.
Okay.
That's about 2,000.
What is it at 8?
And then now let's go up to 8, 58.70. So another $500.
Okay.
So yeah, but there's still buyers out there.
Yeah.
People who are in a good position to buy probably will still buy because there's more, since the market is slowing down, there's more deals out there. You can negotiate seller credit.
Yeah.
You can take advantage of 2-1 buy down.
So let's do this then. For the first 2 years, what is your monthly mortgage payment going to be with a 2-1 buy down?
In this scenario, let's say, so instead of an 8, you'd have a 6.
Okay.
47.96
For the first year.
Yep. So, and
that's about $1,000 savings per month, right?
Correct. 2-1 buy down.
And how much would it take? How much have you seen it take in order to buy down that rate, like a dollar amount? Seller credit,
credit?
out of pocket buyers.
So for the seller credit, I have a buy down calculator.
Okay.
I have it up right now. Let's say the rate is 8. We would need to negotiate on a big purchase price like this or a big loan amount like this. You would need $20,000.
$20,000.
But
okay.
You're a realtor, Khalil. Do you feel confident asking for $20K seller credit on the right property?
All day.
Okay.
But
Feasible. Can be done.
so if you can get a credit for the first year, that's already paying out for itself, right? That's $12,000.
And a married couple can probably handle that.
And then the next year we're talking about 600, so it's about 18,000. Yeah. So you would be saving that $18,000 in real dollars.
Monthly subsidy about a little over $1,000 on the first year, a little over 550, right at 550 on the second year.
Yeah.
And a married couple both working can probably swing it.
Yeah. So if I needed to, this is just me talking my personal opinion methodology. If I needed to buy a house today, I would absolutely try to take advantage of that 2-1 buy down. Do you have a 3-2-1?
There is a 3-2-1 buy down. It's so on this scenario, you would need a credit, down to the dollar amount, $38,363.
Okay.
I would advise you to just ask for 40.
Okay.
Ask for 40, and you can use the remainder for closing costs.
Cool.
Yeah. So you would need $40K. That's a big ask. What would you say? That's a big ask.
Yeah.
So
that is a big ask. And so understanding these things, understanding these factors in buyer trends can also inform me as a seller.
yes.
If I'm going in as a seller, or if I'm going to represent a seller, I would let the seller know, hey, this is the buyer landscape right now. This is what people are doing. They are going to ask you for a seller credit.
Yep.
Price accordingly.
Yep.
Or if we wanted to really get this house off the market, then I would even advertise a seller credit. Now,
I've seen it.
we can't just use seller credits indiscriminately, right? Like, is there a cap? Is there or is there not a cap on how much a seller can offer in credits?
Yeah, there is a cap, and it varies from different rate programs. I think the threshold, roughly 4% or higher.
Okay.
But I've never, I've never seen it go up that high. And yeah, I wouldn't worry about it.
Cool. Swing for the fences.
Yeah. So, it really just takes the right listing. Is it up to date? Has it been sitting? And this is a discussion realtor and lender should have. Okay, realtor or listing agent, for a 2-1 buy down at this purchase price, we need this much, and you can advertise this much. So it's a conversation that lender and realtor should have.
Cool.
Yeah.
If people, I was about to close out the show, but I think I have more things that I want to ask you.
Let's talk.
Yeah.
I'm good.
All right.
I got plenty of time, brother.
Okay. I'm going to name a few names, and you let me know who is the better basketball player.
Okay. This is fun.
Okay. All right. Michael Jordan versus LeBron James.
Oh, the GOAT conversation. My GOAT is Jordan.
Okay.
I'm 34. I watched him win 6 chips, and I loved his game. I loved his demeanor. But I think there's several GOATs. My GOAT is Jordan. LeBron James is definitely a GOAT. Cool.
All right. Next, Kareem versus the Dream, Olajuwon.
So that's definitely a little bit before my time. I really like the Dream's game, Hakeem Olajuwon. His footwork, his post work, amazing. He's still training guys, today's stars, on the footwork and the post work.
That's huge.
And so I personally like Hakeem more.
Me too. Okay. Yeah. Magic versus Steph.
Oh, that's a fun one. Man, I'm gonna go with Steph all day. I love watching Steph. Steph, he changed the game with his 3-pointer. And me, I like to shoot. I have when I played college basketball, I shot a lot of threes. I had a green light here and there, and I still shoot a lot of threes nowadays. And so yeah, I like to see it. And Steph is undersized, and he's crafty. His skill set is amazing, and he's won chips. Yep. In today's NBA, I would say the skill level is higher than back then.
Nice. Okay, Jason Williams, White Chocolate versus the Professor, and one.
Jason Williams all day. The Professor, he actually played community college basketball, which is respectable, but it's not NBA level. Jason Williams was in the NBA. Like, come on.
Yeah. Okay. I actually
Both
saw
fun to watch.
I saw a recent YouTube video with the both of them.
Okay.
Yeah, I think White Chocolate went up to the professor's home gym and they were just spitballing, talking.
That's fun. Yeah.
I didn't see him hoop though.
Yeah. I'm sure they both can still ball. They can still go.
Yeah. My friend Matthew Geverola was recently featured in Real Producers magazine. There he is.
Lovely, lovely.
Really looking good, man.
I appreciate that.
Gold chain. Here's a picture of you in Davao City, I think, with some fam.
Yeah, that is.
Yeah.
They wanted me to add some personal pictures, so I'm really big on family. Family's huge.
Yeah. And looking hard outside of Hawaii Mortgage Experts.
Yeah.
I actually saw you on Facebook before we met in person, and I remember because Chris, let's pull it up in the post. But Matt's picture,
It's there. It's there.
Oh, it's here?
It's in the lower right.
Yeah,
Is that
this
one?
is like the most hard. Like, but
Tough guy.
you were standing too, and I remember looking at that photo like, yo, this guy didn't try to adjust to like whatever industry standards are.
Yeah.
For the profile pic.
I'm not the biggest smiler, or I'm not comfortable smiling in front of the camera.
Yeah.
So,
But yeah, I remember you rolled up on, like, I would see like people you may know. And maybe because Facebook is tracking like where we are, like we were probably at the gym at the same time and I didn't recognize you. But it's like people you may know. Matt Geverola. And I'm looking at this picture. I'm like, this guy's a loan officer. He looks like a freaking hip hop star.
stop. But no, let's. How about the new picture? So I've been updating my headshot.
Yeah.
Here, let's go back one.
Okay.
Would you say that picture is better?
Yeah, that's cold, dude.
Yeah.
I mean, I might kind of green screen the back and pull out the orchids, but
Okay.
yeah, that's tight. I
Yeah.
mean, for your business card, right?
Yeah.
But
I've been pushing that picture more,
that's tight.
and I'm really happy with the photographer. The photographer crushed it.
Yeah, little shout out. What's their name?
Slav. 11 clicks.
Yeah,
on
Slav shot
Instagram.
me too.
Yeah.
Yeah.
Yeah, here we go. I printed out. I didn't have the magazine at home, but
Yeah, ages ago.
Exalda.
Yeah.
Kaleo Mortgage.
That's it, Kaleo Mortgage, man.
That's a good picture.
Thanks, bro. And if people needed to find you, let's say there's a buyer out there checking out this podcast and they're like, hey, this guy, Matt G, he's cool. He hoops. He knows what he's talking about. I want to work with this guy. How can they find you?
You can easily find me. I have two Instagrams. Geverola.rates is my personal one.
Okay.
I still have some business stuff on there, and my link tree is there. And then I have my @the Hawaii Mortgage Expert. So my company is Hawaii Mortgage Experts. I jumped on the Hawaii Mortgage Expert. That's my more business account, and my link tree is there.
Cool.
And my number is 808-383-4706, 383-4706.
All right. Matt G, Hawaii Mortgage Experts. I'll see you on the court, brother.
Thanks, Clay. I really appreciate you. Thanks for having me.
Again, this is Kaleo coming live from, let's try that again. Don't even cut it out, man. They got to see how we're starting. This is Kaleo coming to you live from Aloha for Now Studios on King Street, Honolulu, Hawaii. Thank you for joining us on the High Realty podcast. Aloha for now.